to sell short euro. So I'm going to place an order to sell short. The price I'm looking to sell for 120.36.5. Okay, so let's see if you want to get into this trade, you can follow my trade and you can place an order to sell short euro. Okay, position opened, and let's wait and see how long it will take us to reach necessary profit, and I'll let you know anyway. If you have a strategy, you know what to do. If you don't have a strategy, you can get the strategy on the red line. You can see where you can find the strategy. Otherwise, just follow the trade and make some money, make some profit. Learn to trade. I'll speak to you later.
Years to actually allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Five minutes away from the opening bell here in New York City, all counting down to Chairman Powell at 12 Eastern. Going into that, futures up a half a point, call it one. Up not even 0.1%, just about in positive territory after a really choppy couple of days in markets worldwide, particularly for big tech. Let's get you some morning calls, a look at some of the analyst recommendations on Wall Street this morning. We begin first up with a call from the team over at Morgan Stanley, raising its GE price target to a street high, $17. The analyst expecting next week's Investor Day to serve as an important catalyst. Your second call from Cowen, downgrading Planet Fitness to market perform with an $85 price target. The analyst expecting soft membership growth to drive negative comps this year. That stock is down a little more than 2%. And your third and final call this morning, it comes from Piper Sandler, upgrading Qualcomm to overweight, a 160 price target. The analyst highlighting the stock's compelling entry point after February's sell-off. That stock is positive by almost 1% to 132.90. That's three of the calls. Coming up, recovery optimism and rising bond yields fueling the rotation out of tech stocks. That conversation still ahead with Chris Harvey of Wells Fargo and Katie Kaminsky of Alpha Simplex. From New York, the opening bell up next this Thursday morning. Good morning. Futures just about negative now. This is Bloomberg.
Catch highlights from the City Lab Global City Summit this weekend on Bloomberg Television. The conversation surrounding cybersecurity, urban planning, and transportation. Plus, special guest, U.S. Department of Transportation Secretary Pete Buttigieg and Vice President of the United States, Kamala Harris.
Cities big and small are the heartbeat of our countries.
The City Lab Global City Summit this weekend on Bloomberg Television and Bloomberg Quick Take. Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bell in New York City this morning. Good morning to you all. We're shaping up as follows on the S&P 500, coming in just a little bit, down 3 points and off by almost 1/10%. On a Nasdaq, off by 21 and down a little more than 1/10% there as well. Two questions. Will Chairman Powell lean against the price action in the bond market over the last couple of weeks? And therefore, will Chairman Powell breathe some life back into big tech? Switch up the board into the bond market we go. Yields were lower, then they were higher. Now they're lower again by a basis point to 147 on 10. Some stability going into Chairman Powell's talk a little bit later, 12 Eastern, in around about 2 hours and 30 minutes time. In the FX market, euro weaker, euro dollar 120.34, coming in 0.25%, and crude just keeps on rallying. 62 handle again on WTI. OPEC Plus getting together once again, 62.25 and up by 1.6%. That's the cross-asset story this Thursday with your movers at the market desk. Back with us, I'm pleased to say, Pretty Gupta.
Well, good morning, John. We're starting to see a little bit of a recovery in those big tech heavyweights after the New York FANG index hit correction territory yesterday, all with the exception of Apple. You're seeing the UK Antitrust Authority opening up a probe into Apple's app payment rules, that weighing on the stock a little bit. On the upside, though, oh, and it just turned green, so maybe not so much. On the upside, though, you are seeing Amazon making some strides in their business, opening their first cashierless store outside of the U.S. and negotiating an exclusive streaming right with the NFL. You also have some positivity on the vaccine front. AstraZeneca getting cleared, their vaccine cleared in Germany for the elderly, and CureVac making a deal with Novartis to help manufacture up to 250 million doses. Flip up the boards, and I want to look at those recent outperformers, those big green energy names, all taking a little bit of a pullback today. Plug Power extending their sell-off after it said it would delay some financial reports. Fuel said trading to the downside, in sympathy. You're also seeing some of those commodity-related names, Freeport McMoran and Rio Tinto, taking a step back as well, despite those monster rallies that you saw in the past few days. And John, those are your market movers.
Critty, thank you. About a minute and 42 seconds into the session, your S&P 500 just about positive, up 0.1%. Energy top of the pile, up by 1%. Information technology has been struggling, down another 0.2%. A huge rotation out of the high-flying tech stocks. The big names that you're all familiar with, the big performers of the last 12 months, really struggling. For the latest is Kaylee Lyons. Hey, Kaylee.
Hey, John, a lot of pain has been felt by big tech in the past few weeks. With higher and higher treasury yields, those valuations getting a little bit harder to reckon with. For a long time, the fact that the tech sector was trading at PE multiples, the last seen in the dot-com era, was justified by the fact that we're in a low-yield environment, that you can pay high multiples in the context of ultra-low borrowing costs. But as borrowing costs creep up, that argument gets a bit harder to make. As a result, the Nasdaq 100 down in 9 of the last 13 sessions, even though it is fractionally higher in the first few minutes of trading right now. It's down about 8% from its peak reached last month, nearing correction territory as it hovers just around its lowest levels of the year thus far. And what has been leading the losses within the index are some of the biggest gainers in the prior 11 months. The pandemic winners, the momentum trades that really led this market higher, are suddenly collapsing. Of the 6 best performing stocks in the Nasdaq 100 from March of last year through February of this year, 4 of them are among the biggest losers from February to now. That includes Peloton and Moderna, which are down 31 and 24% respectively over the last month, and Tesla down by 23%. It and some of its mega caps have been the largest drags on the index. Tesla and just 4 other stocks, Apple, Amazon, Microsoft, and Qualcomm, have contributed to 73% of the 719-point loss in the Nasdaq 100 over the month we've just seen. Of course, it isn't just the Nasdaq that these names impact, John. They're heavily weighted within the S&P 500 as well. The tech sector making up 27% of the benchmark, and as a result, as tech has underperformed, we have seen the equal-weighted S&P 500, in which Apple just has the same weighting as a stock like Under Armour, outperformed dramatically, up 20% over the last 4 months, whereas the S&P 500 is only up by about 10%. And because of the S&P's new leadership, John, the likes of energy and financials that just can't pull as much weight, there is a question of what is going to be able to drive this market higher, John.
Katie, thank you. We keep coming back to this story. It's an important one, the struggle at the index level. Looking at the index right now, the Nasdaq positive by 0.25% after the biggest two-day sell-off, biggest two-day slide going back 6 months or so. Wedbush's Dan Ives taking advantage of the sell-off in tech and writing the following: it's a golden opportunity to own the secular tech winners at compelling valuations. We believe that there's another 25% upward move in the cards over the coming year. Joining us now to discuss, let's bring in the team: Chris Harvey of Wells Fargo, Katie Kaminsky of Alpha Simplex. Katie, I want to begin with you in this vicious rotation taking place in the equity market. Is it one you want to stick with?
I mean, I think we're really due for this, and we've been seeing that people are really realizing that duration risk is real. Last week, we're wondering if today is going to be the same repeat. We're going to have the Fed come out and be a little bit calm about inflation or how strong this reflation trade is. But last Thursday just made us all realize that this is real. Duration risk has a big impact on individual investors and how they save. And so it's something that we're going to be hearing a lot more about, and thus the rotation may continue.
Yeah, and it bleeds through from the bond market into the equity market by absolutely hammering growth equities. Chris, this has been the story for you coming into the new year. You know, we had a massive rally at the start of the year, and I joked with you, when are you lifting your price target? When are you lifting your price target? And you laughed in my face and said, I'm not. Here's the story. Then the story, Chris, played out. How technically challenged is the headline index on the S&P 500? And this struggle to break 3,900 on the S&P, is it a struggle we have to live with?
It is a struggle we're going to have to live with. This is something that we're going to deal with and talk about for some time, because the S&P 500 is a growth index. And as growth becomes abundant, that premium you pay for growth starts to compress. And as Katie mentioned, there's a duration component to all this. And so you could see the broader market just kind of rotate as financials and your reopening trade continue to really rally, but other parts begin to struggle. So I do think that was one of our mantras coming into the year. It's playing out the way we thought it would. It won't be in a straight line. We'll see days where tech really bounces, but overall, the recovery is coming. Rates, we believe, are going higher. This is not an environment that's really conducive to outperformance for growth and growth stocks.
It's been so difficult, Chris, and largely because of the weighting of growth stocks in a benchmark. Katie was talking about the weighting of big tech on the S&P 500, IT making up about 27%. Just look at the performance of Apple, Amazon, Tesla over the last month alone. We've been down really quite hard. Apple off by 10.5%, Amazon off by 8.6%, Tesla off by 22%. Chris, just a word to you. The research you published this morning, it's a stock picker's paradise. I know you can't do the single names with me live on air. Where'd you find them, Chris?
Right. So one of the things that we did, and John, I think you know this, one thing we've been playing is higher COVID beta, right? Or what people call the reopening trade. And so about a week ago, I think it was a week ago Monday, we upgraded consumer services. And we upgraded consumer services because the sector has lagged by about 15% over the last year. And you have restaurants, you have casinos, you have leisure names. And that's trying to find places where you can still get exposure to the consumer through the reopening trade that will do better as COVID becomes more manageable, but is less picked over and hasn't performed. And the consumer services area that we point people to.
Katie Kaminsky, it's been called a reopening trade. It's been called a reflation trade. What is it to you? And walk me through the characterization, because I do think words matter. When people talk about reflation, is it a reflation trade? Is it just a huge surprise, upside surprise, positive shock from economic growth? What is it? And why does the name we put on it matter?
This is important because we've been watching this trade since last summer. It was sort of this headwind that occurred in what we're kind of thinking of as the great fiscal experiment. And so what we're worrying about is as we pump more money into the system, where does the system move? And so we saw equities sort of humming along and doing well, but we've started to see massive moves in other asset classes like the dollar and also commodities. And so the reason why the Fed, for example, had to come out and make comments is so many people are watching this reflation in terms of massive resurgence in prices of things that we're going to need down the line for the products that we make in the manufacturing industry and other things that are important to us. So as an example, copper, oil, many of these sort of core products and commodities have really moved. And so that is sort of a leading indicator, something that's getting us a little concerned about when reflation loses its RE or becomes a potential risk for inflation. This bond move last week was just sort of a wake-up call that, hey, this is something that we really do need to think about.
Copper moving the other way today, down by 1.9%. Crude still positive, Katie, up by 1.7 on Brent, on WTI by 1.5. Chris, I know we're having some problems with your shot, but I understand we still have the audio, so I want to continue the conversation with you, sir. A lot of people will come on shows like this and put the financials and the energy plays into the same bucket as we reopen this economy and drive forward. Do you think that's smart?
A lot of people do it. You are right. We view it slightly differently. We view it on a risk-reward basis. When you look at energy is high risk, high reward. When you look at financials, we think it's a better risk-reward. It's more moderate. You don't need a lot of things to really go right. But with energy, you're still dealing with challenged balance sheet. And so we prefer your banks and financials because they can work as interest rates go higher. It's a great capital give back story. We think the capital market story is also very positive and valuations look attractive. If we're going to have a reinflation, if we're going to have a recovery, obviously energy should participate and is participating, but there's a lot more risk in that story. And we generally look for your best risk rewards, and that's more on your bank and financials than on your energy side, if that makes sense.
10 minutes in, S&P 500 in positive territory, yields coming about a basis point, bit of stability. Katie, I want to give you the final word here, if I may. Core call right now, cross-asset, and you do a great job of looking across the world, looking cross-asset right now. What's the core call for you and the team?
I mean, I think that the biggest call right now is how does the reflation trade change? So, for example, is this going to be a story more about energy versus outperforming some of our precious metals? How are we going to continue to see the bond trend move? And my side, I'm seeing a lot of short signals on bonds. So I'd say watch out. Bonds might be something to worry as opposed to something that's a safe haven going forward.
Katie, great work as always. Katie Kaminsky there. And Chris Harvey, thank you. And sorry, I gave him such a hard time at the start of the year with that price target. Chris, good to see you, mate. Chris Harvey and Katie Kaminsky, thank you. Let's get back to the market desk and get you some movers. Here's Kaylee.
Well, John, a few earnings-related movers to keep an eye on. One of them, Purple Innovation, the mattress company, sinking more than 20% after a double miss. Revenues coming in about 11% below expectations. Earnings per share by about 40%. That stock is down right now about 21% as a result. Also, a disappointing outlook from Vroom, expecting a much wider loss than analysts saw in the first quarter. 68 cents a share, whereas the street was only looking for a 37 cents a share loss. The shares are down 22.5% as a result. Also down, but not quite as sharply as Okta, a tepid outlook, but also an acquisition buying rival ID software maker Auth0 for $6.5 billion in an all-stock deal. Investors don't like it. Those shares down about 6%. Speaking of deals, a few others making news and moving markets this morning. United Natural Foods extending its partnership with Whole Foods until September 2027. Whole Foods right now comprises 17% of the company's sales, so that is good news to investors, bidding the stock up by about 14%. DraftKings is up by about 2% after reaching an agreement to become the exclusive sportsbook for UFC in both the U.S. and Canada. And finally, CureVac inking a pact with Novartis for the company to produce its COVID-19 vaccine candidate. Could boost the supply of the shot by as much as 250 million doses over the course of this year and the next. CureVac is higher by nearly 3% on that news, John.
Kelly, thank you. Coming up, President Biden's stimulus package heading to the Senate with a final vote likely being pushed into the weekend. That conversation up next with Debbie Cunningham of Federated Hermes. From New York City, this is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for and then chooses the direction.
The American Rescue Plan is designed to build on our early progress and finish the job. Whatever our Republican colleagues decide to do, the Senate majority is intent on going forward and helping the American people with bold action quickly.
The Senate entering the final stages of stimulus debate with the chamber eyeing a weekend vote. Bloomberg's Kevin Cirilli joining us down in D.C. for the latest. Morning, Kev.
Good morning, Jonathan. Look, 3 quick points. First and foremost, I'm not sensing that there's going to be any major policy procedural hurdle that would thwart President Biden from signing this sometime, if not over the weekend, then early next week. But again, secondly, I would note here that the debate was set to begin last evening. That was delayed. So that could push this into the weekend. And then finally here, thirdly, tomorrow's Jobs Day, and President Biden is already looking for the next item on his policy agenda. Today at the Oval Office, he's going to be meeting with a bipartisan group of lawmakers on infrastructure. The bottom line, they feel that the stimulus part of their policy agenda is really a done deal, and so they're moving on to infrastructure beginning in earnest today.
Kevin, I just wonder how he works with the governors going forward on a whole range of issues, including infrastructure, and Texas very much in focus right now. You and I talked about the reaction from the administration to Governor Abbott reopening the state. Take a listen to what President Biden had to say.
I think it's a big mistake. Look, I hope everybody's realized by now, these masks make a difference. We are on the cusp of being able to fundamentally change the nature of this disease because of the way in which we're able to get vaccines in people's arms. We've been able to move that all the way up to the end of May to have enough for every American, to get every adult American to get a shot.
So, Kevin, Tom Keene asked the question yesterday, and I think it's an important one. Who's the next Texas? And I just wonder whether the president and this administration can get the governors on the same page about the path forward this year.
He can't. And look, I mean, I would even take it to a Democratic-controlled state in New York when you've got Broadway announcing that starting in April, they're going to be coming back on the Great White Way for limited engagements. I mean, I bring this up not as a laughing matter, but the momentum now is behind reopening, especially when President Biden earlier this week said every adult American in the United States could be vaccinated by the end of May.
And the rate is flying. Kevin, good to see you. 2.0 something million right now, just north of 2 million. That's your daily average over the last 7 days. Absolutely phenomenal. You throw in the $1.9 trillion fiscal stimulus plan, and things get interesting in this market, that's for sure. Debbie Cunningham of Federated Hermes expecting stimulus spending to alleviate pressure on the curve. She writes the following: the fiscal stimulus package will likely be financed in part through additional supply of Treasury bills. This will ease supply strains at the front end of the yield curve. Debbie, I'm pleased to say, joins us now. Debbie, let's start there. I'm not sure how many people are familiar with this outside of fixed income. We've all been seeing yields flying out on the 30-year, 10s on a 7-year, the auction last week. Messy. Walk me through what's been happening with T-bills in the very front of the curve.
Well, certainly T-bills have not benefited from any type of a backup. The curve at this point is maybe 5, 6, 7 basis points steep on any given day, and it is driven by Fed policy. And that Fed policy still has the RRP rate anchored at 0 and IOER at 10 basis points. So you've got really two things that can impact that, and that is a potential change in Fed policy on those two key important rates, or some sort of technical factor, and that would be supply driven. So as additional supply comes into the front end of the market, the bill market in particular, in order to help finance this next stimulus package, hopefully from our standpoint, that means you see the 5, 6, 7 basis point steepness in the yield curve back up to something that's more 10 to 15 basis points in steepness.
Do you think you could kill two birds with one stone, so to speak, and do Operation Twist, Debbie? It's something that's come up a couple of times with Fed speakers over the last couple of weeks. Is that an option or just not the optimal one in your mind?
I think it's very much an option. I mean, the Fed has said they don't need draconian types of measures. They don't need negative rates. They don't need, broadened stimulus packages. But I think making adjustments like an Operation Twist would absolutely be beneficial for some aspects of the longer-term fixed income sector.
Debbie, just going through your core position right now, it's just high quality, front-end commercial paper. Can you walk me through how you're thinking about how you approach this market at the moment?
Certainly. Floaters are out of vogue at this point. They have been a stalwart for liquidity products over, decades. But because of the LIBOR cessation issues at this point and, the SOFR benchmark replacement not necessarily having a credit or a yield curve component to it yet, floaters have been out of favor. And as such, I think a lot of people are focusing on the shorter end of the fixed income, high quality sector to be able to basically keep powder dry so that as supply or technical adjustments come and the money market yield curve steepens out, there is a capability then of taking some of the reinvestments from those short-term fixed income or fixed products out into maybe the 6 to 9 to 12 month sector of the liquidity curve and gaining a little bit more from a spread and a duration standpoint in that move.
Are you expecting a little bit more, incrementally speaking, like last week, for instance, just a little bit more rate volatility, Debbie, as we go through the months ahead, the year ahead, and get the inflation that so many people expect?
Well, it's interesting. Rate volatility can be measured in basis points or it can be measured in percentage terms. And when you have a 2 basis point change in a 25 basis point environment, it's a pretty substantial move. Whereas if you're looking at something that's a 1 or a 2% environment, two basis points means nothing. So I do think in the terms of percentage volatility in the marketplace, we will continue to see some spread developments as well as some supply developments that cause some volatility in that sector.
Appreciate the clinic at the front end, Debbie. Really do. Thanks for joining us. Debbie Cunningham there on the latest in this market. Right now, we turn lower on Nasdaq, off by 0.6% on the S&P by 0.2%. A little more than 2 hours away from Chairman Powell. With your movers, your sector price action, here's Kaylee.
Well, John, it's a mixed picture from a sector point of view, but once again, it is energy at the top. The sector up another 0.9% or so, outperforming once again. You also have communication services and consumer staples higher on the day. At the bottom of the barrel, though, information technology down about 0.75%, and materials getting hit hard by the sharp sell-off in industrial metals. And when you look over the last 2 weeks, as we have seen the dramatic sell-off in bond markets and the move higher in treasury yields, it is big tech and bond proxies that have been the biggest losers. Consumer discretionary, which of course is heavily weighted toward Amazon and Tesla, has sunken about 7.5%, information technology by about 5.8%, utilities and consumer staples down about 6 and 3.3% respectively, John.
Kelly, thank you. Coming up, Chairman Powell, just a couple of hours away. The market-moving events you need to be watching. That'll be next in our trading diary. From New York City this morning, good morning. 23 minutes in, we turn just a little bit lower on the S&P, down 0.5% on the Nasdaq. This is Bloomberg.
Here's the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
We heard from Chairman Powell last week twice, Tuesday, Wednesday. Feels like an absolute lifetime ago. He seemed comfortable with what was happening in the bond market. Called it a statement of confidence. Was he comfortable with Thursday? Was that a statement of confidence? You'll find out in about 2 hours and 5 minutes, I guess, when we hear from him a little bit later. Guy Johnson, Alex Steele will beat the drum into that event a little bit later this afternoon, 12 Eastern. That's when that's taking place. Your market right now, 25 minutes in, we decline on the S&P by a little more than 0.1%, down by 0.17. On the Nasdaq, once again, tech is having a tough time. The Nasdaq off by 0.7%. Here's your trading diary then, what you need to be watching this week. Factory orders at the top of the hour, then it's the big one. Fed Chair Jay Powell speaking at noon Eastern. Plus, President Biden discussing infrastructure with members of the House. And closing out the week on Friday with the payrolls report coming up tomorrow morning. Your estimate 195, your range anywhere from negative 35 to positive 500K. Get a dart, throw it on a board. I know a lot more goes into it than that. It's complex, I'm told, but it feels like a guesstimate right now for this economy. Much more still to come from New York City. This was the countdown to the open for our audience worldwide. Continue the conversation on Twitter at Fero TV. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Okay, guys, I'm going to put stop on profit for euro 120.34.5. So if you follow this trade and you need to play stop on profit, otherwise it's not much point to follow my trades if you just want to observe, watch it, just imagine it, how you might make a profit. And this is how day traders work. So based on the profit, not large but small profits, but when you will make many trades a day, you will make quite a good living on it. Okay, so I'm placing a stop open profit for euro to 120.34.5. It gives us 200 pounds in profit. Whatever happened, if price will change and if it will go up, it will be filled at this level. With you, it's all about how much broker pays you per pip. So maybe 20, 30 pounds, 50 pounds, you will get 2 pips profit in this case, and you will get profit 60 pounds or 100 pounds, whatever. Okay, stay safe. I'll speak to you after when this position will be filled. I think it won't be long enough. We will see. Okay, I'll speak to you later, guys.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Okay, position is closed. I'll show you where, well, you can see them. just right here. You're supposed to receive right now from your broker confirmation that you closed your position with profit. In our case, closed here, and it took us how long? 2:30. We entered, and right now 3:15, 45 minutes. We collected profit. Profit, £200. For other people, for maybe our clients who money we trade, they will see when we sold positions, so they will see how much profit we made them. Okay, and I'll show the when it started and when we ended up. That's it. Well done. Good trade. Well done. I'll speak to you again later, and I'll let you know what's happened with next trade with the trade. Okay? Stay safe.
Who Meets Marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love.